and welcome to episode 22 of the OGV Energy Let's Talk Transition podcast. I'm Murray Milhewish, one of the principal consultants at Annett Consulting. If you want to develop your business in the energy transition or require interim support, Annett Consulting can help. Get in touch to find out how. On Let's Talk Transition, we set out to find the people truly leading and innovating in the energy transition. And today we've got somebody who's undoubtedly doing that. Each of the leaders we meet on the show has their own role to play. If you've been following the series, you'll already know that most of our guests have been founders, chief executives, and innovators of project development businesses or technology businesses. But I'm delighted to have on the show today another leader with an essential but slightly different role in the energy transition. The same money makes the world go round, and of course, it's no different with the energy transition. My guest today's got nearly 20 years banking experience across credit risk and reporting, business banking, project management, and energy finance. After a 12-month internship at Deutsche Bank, Mark joined Bank of Scotland, latterly Lloyds Bank, as a graduate trainee. He spent 2012 and 2013 in Houston, Texas, focused on US energy clients, and for the last 15 years, he's been specialised in energy finance, primarily to independent oil and gas companies in the North Sea with Lloyds Bank, Commonwealth Bank of Australia, and most recently with DNB Bank. Mark joined the Scottish National Investment Bank in early August 2021 as Executive Director for the Net Zero Mission, and he's now the Chief Investment Officer. And I'm delighted to welcome to the show Mark Munro of the Scottish National Investment Bank. Hi, Mark. Thanks for joining us.
Good morning, Murray. Thank you for having me.
Mark, first of all, can you give us an overview of the bank, its footprint and its activities?
I'm more than happy to. The Scottish National Investment Bank was vested 3 years ago, and it's Scotland's mission-led development bank. We're capitalised with £2 billion over 10 years, and we've been created to address the grand challenges facing Scotland. So the grand challenges facing Scotland is the climate emergency, the growing inequality across society, and the demographic change. So obviously maybe 30, 40 years ago, we had quite a wide base supporting a much smaller, older population. And in a very short period of time, it's essentially been inverted. That distills down into three missions, which have been set for the bank. So one is supporting that journey to net zero by 2045. We have a places mission, which reflects the inequality grand challenge, and that's about regenerating and building Scotland's communities and providing opportunity for Scotland's people. And our demographic grand challenge distills down into our innovation mission, which in a lot of ways is built. It builds on the sort of strengths of Scotland's universities and tries to create 21st century industries in Scotland to reflect that smaller base supporting an older population. The bank is a patient capital provider. We can invest in debt, equity, and into funds. We have an ability to invest between £1 and £50 million, and the intention is we're complementary to existing debt and equity providers. By being patient capital, what I mean by this is that when it comes to debt, we may take a longer tenor than the traditional providers of debt. We may be junior or provide mezzanine financing, and when it comes to equity, we won't have, or we can have a longer investment horizon than the sort of 3 to 5 years, which may be traditional. We may take a 5, 7, possibly a 10-year investment horizon, so to provide consistency in the capital structure and in support sort of technology growth. I would mention the bank does have two returns on our capital, so we're not a grant provider, we are a commercial investor, but we also have an impact return that we seek. So that okay. Is around.
Sorry, carry on. Yeah, I'm interested. Yeah.
Sorry, yeah. So we have those two returns on capital: the commercial return and an impact return. The impact return is focused upon sort of things like one, doing no more harm is not acceptable. We need to see positive change, and that would be things such as careers rather than jobs. Or actually avoiding and reducing emissions as opposed to capping emissions at the current level. So these are the types of additional all requirements, but in the end, they all add a premium to the businesses that we're investing in. I'll just touch on what we've. One final point that may be interesting before I touch on the last point is that when it comes to equity, we are a minority investor. So by that, we want to be sort of below 49%. I don't think anyone wants to be on the government balance sheet if they can help it, and all the requirements that come. I mentioned the bank invested 3 years ago. In those 3 years, we've invested just over £460 million. And that's been alongside 750 million. So quite a significant undertaking within that period. And we have 29 assets across Scotland within our portfolio.
Wow. So look, that has covered a huge amount already. What an intro. Tell us then, so the bank's an impact investor, and one of your missions is to address the climate emergency. How do you go about finding these investments?
There's two ways. Obviously, a lot comes to us. We've been quite public in what we're trying to achieve. And Scotland has been, I would argue, a hotbed of certainly solutions when it comes to the climate emergency and the transition. So we see a lot of opportunities. What's worth maybe sharing is in 3 years, and now this is across all the missions, we've seen, we're now touching 1,000 investment opportunities, and over somewhere between a third and a half of that is within our net zero mission. So a lot of it comes into the bank through the positioning that we take with conferences, through our LinkedIn, our social medias, but also we're also out in the market, and we've got a really fantastic group of people who have a background. My own background is energy related, so there'll be a lot of, hey Mark, here's an opportunity. Yeah. Does this sort of chime with the bank, and then we start the conversation from there. But yeah, listen, Scotland's got a lot of solutions that are being looked into, and it means the bank's getting access to a lot of these.
Great. And Mark, you mentioned that the bank's got 29 assets. Are those 29 investments?
Yeah, sorry. So yeah, that's 29 investments that we've made in those 3 years.
Great. And, can you give us some examples of the investments that have been made by the bank?
Yeah, so let me start with an infrastructure investment, and it was at the end of it, but it was still important that we helped sort of push Aberdeen South Harbour over the line. So that was a traditional infrastructure. So for those who are unaware, the Aberdeen South Harbour is an extension. It's Aberdeen Harbour, North Harbour. The original is a busy place, but it has it's hemmed in by legacy issues. It's in the city centre, for example. So the Harbour Board undertook, I think 13 years ago now, to build out and reclaim some of the land in the sea, and that is to be able to position the harbour for bigger vessels and for things like the energy transition, and it also sits adjacent to what will become the energy transition zone in Aberdeen. So that was one. We also invested in tidal energy. We have equity and debt investments within 2 tidal energy companies, which are hugely interesting. We're invested in a subsea battery provider, which enables or tries to support the intermittence of offshore wind and other technologies. We're also invested in the likes of Indie Nature, which provides hemp-based insulation, so it actually can be carbon positive with regards to the insulation in your home. We have investments in companies such as Sunamp, which is can replace the hot water storage in your house, and has a significant saving on energy consumption, but still provides the hot water that's required within your home. So quite a range there from the concrete through to solutions in people's houses.
Great. And, what does your role in all of this involve, Mark, on a day-to-day basis? And what sort of team have you got behind you?
So my responsibility spans the origination, the portfolio, and the impact teams, which consists of just over 30 colleagues, very talented and passionate individuals who are focused on supporting the bank's missions. My role is to ensure that we're sourcing, executing, managing, and ultimately exiting our investments in support of those missions, but we're doing so in a responsible manner and which delivers on those commercial and impact returns that I mentioned earlier on.
And all of your team are based in Edinburgh?
We're based across the UK. We're spread across Scotland. So we have a diverse range of talents and experiences. So we're drawn from the public sector, the private sector, and the advisory sector too. So quite an eclectic but strong mix of skills and experience to support the bank.
Okay, great. And in terms of of what you've got to invest, you mentioned £2 billion. Where's it come from?
It comes from the Scottish Government. So the 2 billion, as I say, capitalised over 10 years. We've also had additional capitalisation of £25 million in this financial year, which is related to the Just Transition Fund, which was a fund announced 2 or 3 years ago for £500 million, which is focused on the northeast of Scotland. We do have ambitions as a third party to raise third-party capital, which would enable us to invest further into the bank's missions. But I would reiterate that of the £460 million we've invested alongside £750 million of private capital. So I think quite a strong public to private ratio within those 3 years, and again ambitions to improve that further.
And just to get my head around this, Mark, so the Scottish National Investment Bank, and one of your missions is the climate emergency. Brilliant. Now, is the bank in business to support projects in Scotland or companies that are based in Scotland that might have international projects and offerings?
Okay, I'm going to say both, and I'll explain. So we obviously are here to support projects in Scotland, and as I referenced one earlier, so I think we're sort of on the path to doing so, and we want to do more. We will support businesses in Scotland that do export, and will support businesses coming into Scotland that has a very strong Scottish nexus. We've not yet reached the stage, though, where we are supporting Scottish businesses projects outside of Scotland, and by that maybe an equity or debt provision for, say, an offshore wind farm in France. I'm not sure we'll ever get there. I think we've got enough to invest here in Scotland that will mean the projects and businesses both based in Scotland and coming into Scotland will be recipients of the bank's capital, certainly for the foreseeable future. Yeah.
Okay, that's good to know. Thanks for that. And look, Mark, I think we're all aware on this podcast that, the route to the energy transition, it's not without its twists and turns. And recently we've had, some real challenges for offshore wind, real challenges in the offshore wind industry in particular. And I'm thinking here, the Swedish utility Vattenfall pulled out of the 1.4 gigawatt Norfolk Boreas project. Then, in the UK ER5 round, there were 0 bidders. Now, Ørsted, of course, have taken a huge hit from their projects in North America, and Siemens Gamesa's had some particular challenges that have been highlighted recently too. As a banker, how does that affect your view of the energy transition? What's your take on all of this?
I think I was taught always never waste a good crisis. I think what we need to remember, and so if we set context, and then I'll maybe sort of show what we're trying to do, given this is let's recognise we're living in very uncertain times, and arguably the most uncertain in 35 years. There's significant geopolitical uncertainty. There's high inflation, high interest rates, and a consequence of that is we've got really fragmented supply chains. It equals a very difficult market to operate, and the projects you referenced have been caught up within that. I think what it does make us question or need to reflect upon is the approaches and the business models, and ask whether those approaches and business models of the past apply for the current period. In terms of where we're at, we will continue to invest. That is a mandate of a development bank and the Scottish National Investment Bank. When it comes to the projects themselves, I acknowledge that they are seeking certainty. They're seeking certainty on the pricing and the consents, and ultimately, I would also argue access to a competitive supply chain. And that's so the bank will look to invest within the projects where there's a gap. We are subject, and I should have mentioned this earlier, we are subject to subsidy control. I mentioned that we will be complementary to existing debt and equity providers. Just to add more colour to that, that means that we're not here to undercut a lending rate from a high street bank or a project finance bank. We're not here to provide what may be seen as more investor friendly terms. We are commercial investing. We will invest at market rates. And it also means that we cannot cut across those investors who would be prepared to fund debt or equity ahead of us. So that is just a point to be clear upon. Okay. But this uncertainty does mean that there may be opportunities for the bank to invest in offshore wind projects, to invest in tidal as we have done, and onshore, be it battery or district heat networks, as well as to provide debt. Where we have focused, though, in the last 12 months or so, is the point I made around the competitive supply chain. Especially when it comes to offshore wind, and again, to be more specific, floating. Scotland's presented a huge opportunity for Scotland and the UK, and Europe as well, and we would play a significant role in electrifying our networks, and if we can, let's electrify as much as we can. We're starting from a low base when it comes to the supply chain. However, there is an asset within Scotland and the UK around the people and experiences we have from the energy supply chain, which is primarily oil and gas at the moment. You know, the oil field services, if you like to use old parlance. There's huge amounts of knowledge and experience which we need to take across. And what the bank is seeking to do is to provide or help bridge that capability so that when the projects do have the certainty around pricing and consent, that the supply chain is available to them here in Scotland and the UK. And also it means that we're not losing a whole host of people and then potentially having to import. We'll have to import people and skills and some elements of the project, but the aim is to have as much of that capability and expertise here in Scotland.
Okay, and you know, it's great to hear that the bank and I guess the government that's behind the bank is taking that long-term patient approach, because ultimately the energy transition's happening, right? It's got to happen, not just for the climate emergency, but energy security too. So it's got to happen. Great. So great to hear that is being supported. Mark, the First Minister announced recently that the Scottish Government would be investing £500 million in the offshore wind supply chain over the next 5 years. Can you tell us a little bit more about that?
Sure. So I don't have all the details, but we're aware that there's the 500 million allocated for that supply chain. And where I'm delighted is that's consistent with the points I was making just previously. We have spent some time establishing what the supply chain capability is for offshore wind, primarily floating, but that doesn't say we will miss any opportunities when it comes to fixed. It's just a very well established supply chain. What I hope will be is that we will have capital to invest. Now, we've identified some priority areas, some critical infrastructure is required, and that's around the ports and harbours. And we do not have enough capacity and capability within Scotland, and that's something that must be addressed in the coming 3 to 5 years, because what we don't want is to miss the opportunity. And by that, when the contracts start to be awarded, we're not wanting the developers to have to select somewhere else. So we're looking at working with the ports and harbours across Scotland who will be able to fulfil the requirements for the offshore wind. We're also focused on the manufacturing. We want to increase the manufacturing capability. So a lot of sheds perhaps, but really a high-end manufacturing. It could be blades, it could be towers, most likely will be cables as well. So these are the types of areas that I believe that we have knowledge capability, but we just need to be able to make that investment, and we will make that investment, and thereby provide the opportunity for it to be produced here in Scotland.
And Mark, you mentioned too, was it the Just Transition Fund, a £25 million fund? So that's separate, but tell us a little bit about that and how it fits in with the plans and how it's accessed and what it is.
Yeah, so that's something that's live today, and focuses on the northeast, so Murray, Buck, and Aberdeenshire. And it is, I touched upon that the asset, and I do refer to it as an asset, and that's the people and the skills and experience we have in energy supply chain, primarily subsea engineering. And the engineers who listen to this may take a little bit of umbrage, but I hope they would excuse a spreadsheet banker here. But for a long time we've been able to find, develop, and transport electrons, liquids and gas molecules. We can do so with electrons, so we need to build on that. And please, I'm not inferring it's exactly the same. I'm just saying that there's some analog, again, to use engineering parlance, between them, that we can utilise given what we built up in 40 years. So the Just Transition Fund there is to support that. We recognise that oil and gas is a predominant revenue generating for a lot of these businesses today. That will reduce as we go forward in this decade, and we will see the renewable, the offshore wind opportunity, but there could be a gap, and thereby what we want to do is use this funding to ensure there isn't a gap, that we don't lose people and the skills and the assets I keep referring to in the middle of the decade, because we may see a sort of furlough in the oil and gas production, and thereby the support that's required, and then the opportunity for offshore wind is then a few years later, and people say that's enough for me, and they don't come back. We want to ensure that there's a continuation of that. So through the Just Transition Fund, we will invest, and for those who are interested, they can log on and have a look at our Just Transition principles. So these are what we set out in the summer, and the essence of those is that we will invest in oil and gas support businesses that has the skills for the offshore wind and other technologies, other renewable technology. It could be tidal, it could be batteries, it could be district heating in the future. And we'll invest today, and we'll work with those businesses who are meaningful towards it. What I can't have is you send me a presentation, put a couple of nice words in there, but it's an oil and gas deck. I will say I come from an oil and gas background. I'm very aware of what it looks like.
You can see through it.
I can see through it. I hope I can, but it's a meaningful progress. So it may be that there's already a renewables director. It may be there's no business currently generated, but there's a real steps and strategy, both in-house and external, so public, committing towards that. And we will work with those businesses in the coming years to ensure that there's that sort of continuation of the business and the skills and experience, and we've did that already. So I would point to Northstar. Northstar is currently an offshore emergency vessel provider. They are moving into providing CTVs and OTVs for offshore wind, and we've taken a debt position alongside the team at Northstar, and that will transition their revenue from oil and gas through to renewables over a period. We've invested in Verloom. I mentioned Verloom not by name but by description earlier, which is a subsea battery provider in Aberdeen. Again, using huge amounts of knowledge gained from oil and gas, and they will provide these batteries, and they'll give balance, hopefully, to the renewable generation assets that will be required in the future. So we're starting to address intermittency within those assets. So those are just two. I'm missing out a few others, so apologies to our investee companies that I've not mentioned, but I'm conscious we're also fixed for time as well, Murray.
That's fine, Mark. And tell me, so £25 million for the Just Transition Fund. Are you given a time scale over which that has to be invested, or how does it work? And if so, how far through are you? And what remains to be invested out of it?
So the 25 million remains to be invested, and we need to invest that within our current financial year, which runs to 31st of March. What I will say is the bank will invest alongside that as well. And whilst we're 5 months or so out, I'm not worried that we will not be investing that 25 million pounds. If we were to speak in a month, maybe a little bit longer, I'm sure we'll be able to tell you we have made the first investments, or hopefully we'll have made those first investments. But we have a strong pipeline. We're up in the northeast of Scotland a lot, and we've got a lot of meetings coming up as well with regards to that funding.
Brilliant. And
so watch this space.
Watch this space. We certainly will be, for sure. Is the bank always a co-investor, or does it sometimes just invest on its own?
The bank can invest on a bilateral basis, but our investment strategy does seek for us to invest alongside other capital providers. And that, if we go back to being an impact investor, is important for us, because it enables us to leverage and multiply the impact that can be had. And that's important in meeting the bank's missions.
Okay, and look, if any of our audience, they might be potential co-investors, they might be potential, investees. What does your ideal investment look like, and how are they evaluated?
Let me start with how they're evaluated. In fact, let's go back. What will it look like? One, we'll be able to generate a commercial return, and we'll create the impact that is in accordance with the bank's missions. So again, I'd reference that when the impact at a high level, and we can go through sort of line by line when someone's ready, but that is creating careers, not jobs. It's having a meaningful reduction in the carbon emissions. It's providing solutions which can do that and which we can measure. It's ensuring that we have equality, diversity, and inclusion across the workforce within these businesses as well. And there's a lot on our website which will sort of break that down further, and I'm more than happy to have those conversations. But the commercial aspect is important as well, as I've mentioned a couple of times. In terms of our investment process, our investment process should take between sort of 3 to 4 months. That is because there is a diligence requirement. Most of that is focused on the management teams and the markets in which we'd be investing in, and the technology as well. It does tend to be, given the bank's mandate, we're investing in quite sort of nascent technology, so that a little bit of time is required to understand the technology, its markets, and then the capability of those who are placing it in the market and can deliver the plan.
Okay, and just what does the very first step in that process look like? How do our audience get in front of Mark Munro?
Well, there's other colleagues who are very good as well. Thankfully, as I said, there's 30 of us. But they can reach out at inquiries@thebank.scot, which is our email address. You'll find it on the website, as well as our own email addresses, and you'll be able to send us in the opportunity. We'll reach out, we'll have a conversation, and then we'll go from there. Hopefully you'll find it accessible.
And do you have any advice for businesses that are going to be contacting you through the website?
Happy always to provide some advice. Just in short, 3 things I would say is, and this is not to be taken personally, sort of understand who you are and the strengths and the weaknesses of the management teams. It's really important. Also be cognizant that the management teams may change over the course of an investment. So where there's gaps, it doesn't need to be addressed on day one. We can address that through the investment process and thereafter. The second is know your market. Really know your market, and be agile as well. We spoke of the current sort of macro conditions that we're facing. You need to be agile. It's not trying to force your product into a market that doesn't want it. So be very aware of your market. And the third, information. And we could spend a long time on this, but what I will say around it is have thoughtful and considered assumptions. I see too many space shuttle launches when it comes to things like revenue and very little cost, and being cash flow positive within 3 days of a product launch. So I'm not saying come with something that's going to take 25 years either, but let just be sort of considered in those assumptions when it comes to the information. And the last bit to that is there are a lot of good advisors out there.
Mhm.
You know, advisors sometimes can have the wrong reputation, but there's a huge amount of good advisors, and it is worth investing in an advisor earlier, and working alongside those advisors.
Yeah. Okay. Brilliant. And Mark, this podcast and the energy transition aside, you've had a really successful career in banking, not just in the UK, but in the USA as well. One of the themes we've always got in the podcast is, how do you define success for yourself personally? What is your philosophy of success?
Either I'm enjoying it, I'm enjoying what I'm doing. I think that would be the first measure of success. If you're going to spend 8, 9, 10, many hours a day, 5 days a week, then I think you need to be enjoying what you're doing.
Great. So enjoy what you're doing. That's good. And thinking back to when you chose banking for your career, what was that attracted you to the sector?
I think the fact that there's lots of different opportunities. I've worked across multiple sectors. Okay, I've focused on oil and gas, for example, for a long period. But energy is weird and wonderful. During that time, I've had many different clients in all parts of the world who did things that weren't oil and gas. So I think that diversity is really interesting, and ultimately you are making a difference. I know a lot of people may sort of sneer at the bankers and the difference we're making, but the capital is needed. It's what we're talking about today, Murray. The bank's missions really give me a North Star and as to how I allocate that capital, and that's important. So for as much as there may be the odd different conversation with a capital provider, the capital is needed, and that's what sort of drives me.
Brilliant. Okay. And looking back again to the start of your career, what advice would you give yourself if you could go back to yourself, perhaps just choosing or maybe even leaving university?
Yeah,
What would
well,
you
we're
say
going
to
back
yourself?
over more than a couple of decades now. You stop counting after a couple. Um, I would say always be open to learning, and be aware that the learning doesn't always just come from those above. It can come from peers. It can come from potentially junior colleagues, it can come from new colleagues. It can come from the investee companies that we're working with. As much as I need to have fun, I think a driver of that, or enjoy what I'm doing, is that I'm learning. I'm constantly learning. And if I get to the point that I'm no longer learning, then I'm not sure that role or that institution is the right one for me. So I would always say you need to be that open-minded and be ready to learn, and have a bit of agility. It take much longer than the time we have allocated, but my career's been through a few cycles, a few different institutions. I've gone through various journeys themselves, and that's meant that I've had to be flexible in the journey that I've taken. So it's never linear, never linear.
Yeah, that's for sure. I think when I look back at my own career, I've always thought pretty much exactly the same. So, Mark, look, in each of our episodes, of course, we ask our guests to set a question for our next guest without knowing who they're going to be. And in our last episode, we met the Energy and Environment Minister for Scotland, Gillian Martin. And she left this question for you. How are you going to encourage young people to go into your industry, and in particular, young women?
Yeah, it's an area of focus for myself as a bank CIO, and increasing the number of female allocators. There's been a dearth in terms of female allocators, and what that's also had an impact through is to the amount of capital that's allocated to female-led businesses. And it's something that I'm adamant we will change. The bank currently has 4 investments that are female-led, so that's either CEO or chair. We also seek to have diversity across our boardrooms. So where we're invested, we will push for that diversity of thought, experience across the management teams. That is only a good thing. And then within our own teams, Well, it starts at the bank's board. The bank's board has a requirement to be 50-50, male, female, and it is. That then sort of filters down through our team. So across each of the different levels within the investment team, we're at least 40, if not 50%, in terms of male, female. And then there's other protected characteristics which are represented within the bank's team. So we're above, or sorry, I'm not above. We are in excess of where the industry is, and I hope that the more opportunities we can provide, some of our colleagues will inevitably leave and seek other opportunities, and they will be able to take that into other areas. So if we're providing the industry with those female allocators, then we will see an uptick within the number of senior, any level of female allocator, and then the amount of capital allocated to female-led businesses.
Okay. And sorry, Mark, just by an allocator, you mean somebody to whom you're allocating capital?
That's the investor, yes. So the one who'll be working within the deal teams and leading the deal teams. So the ones that will be making the recommendation to our committee to make an investment.
So great. So, essentially then you're encouraging young people to go into your industry, and in particular young women, because not only are your own internal structures focused around this 50-50 breakdown of men and women and other characteristics, but you're encouraging that in your businesses in which you invest as well. Is that right?
That's correct, as well as the other protected characteristics too.
Yeah. Okay. Interesting. And how about young people in particular, Mark? What's the bank doing to encourage the development of young talent?
Well, interestingly, I think the bank's missions. So the bank absolutely encourages. We're at offshore Europe a few months back, and I was so delighted that we had, it did tend to be younger people coming up to the bank stand and asking how they can come and work with the bank. And I think, so we work hard on it, but the bank's missions really chime with the younger people. And what I was saying earlier about providing capital, the world does need capital to make the changes that are required. And the fact that the bank has these missions that we sort of seeking to deliver means that it's the sort of framework of the bank just attracts young people. And then the way in which we build the culture within the bank then means that there's an additional draw, and that is about being sort of passionate, about being working as a team, and being inclusive, and providing autonomy. And we will provide opportunity to younger people, and I think that's so important from within the bank's internal structures.
Mark, when you were at the beginning of your career, was there a particular mentor that you had at any one stage? And is there something in that can be learned from or reflected upon to support these young people as they come through their careers?
I'd always encourage a mentor. Even now, I do have mentors. I'm mentoring, but I think also mentors need mentors as well. So in the earlier stages of my career, and I did move around quite a lot, but there were one or two people who I still reach out to today, where you can check in, calibrate, decompress, regain the confidence again through discussions with them.
Yeah, I must admit, as I look back on my career, and the, investments I've been involved in, for example, raising capital and so on for various businesses, I do think that mentors are something that I have used, but in my own experience, possibly not as much as I could have done. And, if I was in your shoes, I think I would be looking back thinking, my advice to young people, find a good mentor and use them more.
And don't forget, it could be a peer as well.
Yeah.
I think just having a peer too, that you can be open with, and I suppose create the safe environment that you need, can go a long way.
Yeah, for sure. And Mark, ahead of recording today, I asked if you would kindly set a question for our next guest, and again, without knowing who they're going to be. So can you let us have it, please, Mark?
Sure. I would ask, where are the skills gaps that need addressed most urgently when it comes to energy transition?
Ooh, that's interesting. That is an interesting question, isn't it? And last week we actually held the Energy Transition Careers Fair, and it was really interesting. You know, we sold out the event. We had 27 exhibitors. We had over 300 people come along, and that's exactly the question they had. Each one of them, of course, looking for that gap. And so, where are the skills gaps? And sorry, where are the skills gaps, Mark, and what are you doing to address them?
That need addressed most urgently.
That need addressed most urgently. Great. Now, I look forward to asking that question for sure. So that is most interesting. Great. So, today's podcast I found really interesting. You've brought a new angle to the energy transition conversation, Mark. Thank you for that. And I think for me, as somebody involved in technology and service businesses across the energy transition, funding is a concern as we look around the market and we see, some suboptimal signs, but still with amazing long-term potential, some incredible requirements. And for me, it's brilliant to see the scale of the Scottish National Investment Bank and the vision of what you want to invest in and how you're going to go about, or how you are going about investing in it. So that's been most interesting. Thanks for that. And look, that brings us to the end of our podcast recording today. So I'd like to thank you, Mark Munro, Chief Investment Officer of the Scottish National Investment Bank, for joining us today.
Thank you for having me.
Great. And as always, feedback on today's podcast and suggestions for who we should feature in the future would be most welcome. Feel free to get in touch through LinkedIn or by email to murray@annetconsulting.com. And if you'd like to see or listen to some of our other episodes, they can be found online at ogv.energy and Spotify, Apple, YouTube, and wherever else you get your podcasts. So great. And thank you again, Mark. It was really interesting to meet you on the show today. And I look forward to seeing the audience again on the next show.